we coined something called market mapping. So for us, the best way to get real live data for like to inform our investment thesis long term, it's to say, okay, if we have, $100 million exposure to a company XYZ that's doing, inference chips and AI or large language models, well, we could kind of keep a tab on where that industry is evolving to. How many people are actually going to use it? How's user, adoption going? What's driving the main business? Is it B2B, B2C, B2B2C, right? What is the dynamic of utilization happening? And then it can inform, okay, well, also, where's that company going to do and what they're not going to do? And let's kind of peel that back and look at where we could invest in now to hopefully anticipate a future problem that that company will either need as a strategic partner or benefit from in some sort of capacity.
Hey everyone, welcome back to the Ignite podcast. Today, we're thrilled to have Abdo John Hajj on the program. He's the managing partner at Type 1 Ventures. That's a very cool name. Abdo is a multi-dimensional investor and former founder, has deployed over $1 billion across some of the most transformational companies in the space, tech, AI, industrial infrastructure, including names you'll definitely know of: SpaceX, OpenAI, Neuralink, Plaid. He's on a mission to accelerate humanity's path towards a Type 1 civilization. My sci-fi nerd can't wait to talk about that. From producing films as a teen to backing the future of artificial gravity and space manufacturing. Abdo's trajectory is anything but conventional. Thanks for coming on.
Yeah. Hey, Brian, thank you so much for having me. Appreciate it, and excited to dive in. Anytime someone wants to nerd out on a Type 1 civilization, I'm excited about it.
Yeah, I grew up watching Star Trek. You more of a Star Wars fan or a Star Trek fan? That's the first question.
Star Wars.
Okay, why Star Wars over Star Trek?
Well, first and foremost, I think I love the story behind the rebellion. I think it's like a very interesting backstory. So when I think about just like the evolution of it, and also how the perception of like George Lucas did a phenomenal job at like perceiving what could be a revolt against established society, he kind of flips the narrative and you kind of sympathize with that. So I think that's a really interesting like framework for developing a universe. And really they're like just exceptional dramas in my opinion. So like they're like from like actual filmmaking perspective, I'm like, these are just phenomenal.
They're kind of timeless archetypes of stories.
Yeah, exactly.
The condition.
Of stories I think are very timeless. So yeah, that's I think driven by mostly the fact that I think they're just compelling stories too. The actual like interpersonal dynamics between the characters and stuff like that. So that draws me to that. In terms of like maybe conceptualizing the future, they're like Type 3 civilization, but we'll see where it goes.
Yeah. So let's talk about the name and get that out of the way. I know you've probably explained this dozens of times or hundreds of times at this point, but maybe you could walk us through the different types of civilization, where we are now and where we want to get to, and what a Type 3 is even.
Yeah, I think the best way to kind of think about it is building and progressing humanity towards a Type 1 civilization is really our way of frameworking like the discipline behind our firm. So it's like a vision-oriented investment platform where we're thinking about what does it actually take to achieve this quote unquote Type 1 civilization? Well, what is a Type 1 civilization is the first question. And that to us is becoming the framework of it is built on the Kardashev scale. So if you're an astrophysicist or you're a sci-fi nerd, you might know that there's something that exists, which is Kardashev scale, which is a mathematical equation that allows us to identify technological advancements in society. So if you're looking at it from that framework, it's really about energy consumption and how do we become a planetary species that essentially encapsulates all of our energy resources in a sustainable way and then outwardly projects them over time. And our thinking is it's twofold, right? It's collect all the energy, our parent star's energy, the sun's energy, using geothermal, using all of the technologies and things that could potentially exist as alternative energy sources. And then the second part that we kind of subscribe to is becoming interplanetary, something that Elon talks about, something a lot of these people are thinking about, these forward progressive technologists are thinking about. So that's what really makes it. In terms of the scale, think of it as like an algorithm that collects a bunch of information, data points on energy and outputs a ratio. That ratio is ideally to achieve a 1.0 civilization. Right now we're at a 0.72 civilization. And the idea is like we need to capture both of those things to start getting there. When I go to like an institutional investor and I'm like, we're building a Type 1 civilization, they're like, you're out of your goddamn mind, right? And so what we had to do is we had to take this longer term vision and we had to say, okay, how do we deconstruct what we believe is a 100 to 150 year program into 5 to 10 year digestible strategies? And we break down that 100-year vision into those pieces. And we say, okay, what are the fundamental, most integral infrastructure technologies that need to exist in order to establish what our long-term vision is, and really kind of back into that from like a first principles perspective. And then you add the layer of we're an investment firm, right? So the fiduciary duty of that and thinking about all the responsibilities that come alongside of it. So we think we've done a really good job at kind of maintaining that like long-term vision, but also focusing on allowing, a lot of these founders and a lot of these innovators to feel really comfortable with us and where we understand that evolution is, right? And it's constantly changing, right? With the advent of AI, the convergence of certain technologies, space, the cost of launch decreasing significantly, like all of these things immediately make that scale go up and down, up and down, up and down. So we're constantly kind of monitoring it to see how close we could get.
So type 1 means you use all the energy of your home planet, or is that the home solar system?
So for us, type 1, like that first step of civilization, is about harnessing all of the sun's energy. And using it sustainably on our planet. It's about literally creating a sustainable planet. That to us is that first step. And then starting to scratch the surface of an interplanetary species. And then you start getting into type 2 and type 3 when
these are order of magnitude. It's like a type 2, my understanding is the entire galaxy, basically.
Galaxy.
Yeah.
And then controlling the galaxy's energy. Right. So then think about the level of technology advancement that we need to do that. And we can't think about that because right now we're like, all right, how do we lean off fossil fuels?
Right.
We're still there.
We're still burning oil.
Yeah, we're still burning oil, which is a huge thing, right? When we're in my day-to-day job is to really think about how all the industries that we invest in, how they intersect at a point where we get closer and closer to that goal.
So how did you get into that? I mean, you started in film production as a teenager and then you ended up in deep tech investing. That's quite a journey. Yeah, what are some of the key moments, inflection points that shape that trajectory?
I mean, listen, like when you're investing in founders, you're kind of chasing stories, right? There's narrative there too. There's kind of, you look at any great entrepreneur that's developed like groundbreaking technologies, there's always like, we start to naturally get inclined to understanding who that character is, what are their motivations, what created this idea. And I think for me, what happened was I grew up in LA. I was born and raised in LA. My parents are Lebanese immigrants. So I kind of grew up close to the entertainment industry, literally in Burbank, which is like Hollywood away from Hollywood, right? The neighboring town to Hollywood. And just in that process, I think I met a lot of people in film production. I was always like more inclined to creative things. I play a lot of instruments. I do those things. So it felt like something I was worth like exploring, like film and television. So when I started to go down that path, I realized very quickly that I was more attracted to kind of the business of it. Whereas, I love the story. I love the idea. I love staking the ideas. I love, working with directors and getting their vision, put to life. But it wasn't necessarily something that I thought had longevity for me on an individual basis. And the characters and the personalities, it was a whole different set of industry. So I thought, all right, how do I run away from a bunch of narcissists? Let me leave film and go to venture. And boy, was I shocked too.
another pool of narcissists.
Yeah, exactly.
So you're on a podcast.
Yeah, I'm just teasing.
Yeah, totally.
When I made that transition, I had started a company when I was at USC, and our whole idea was to disrupt, conceptually ambitious projects at a low cost and leveraging brand dollars to do it. So we essentially created like a small marketplace to help brands sponsor YouTube content on behalf of record labels and all of these things. That kind of scaled. My partner and I still are best friends to this day, but we decided to go our different ways because I just wasn't in love with the business. But when I did that, I ended up partnering with a private equity group to focus on spinning out my portion. Like we split the assets. My portion was going to go into entertainment technology investing. So I made a quick transition. I realized that short-term content was quickly getting disrupted. Brands were getting valuable there. YouTube. This is even a little bit before Instagram was becoming such an advertisement engine. And I saw this huge opportunity to start thinking about technology and how it's influencing entertainment. I won't say I was smart enough to anticipate this whole AI emergence of AI content. What I did start to think about was like, what does immersive entertainment look like? What are the different hardware solutions that are coming out that might be existing? Realized very quickly I can't build a strategy around that, and then started to just go into deep industrial investing. So worked with a few private equity firms. Some of them you may be familiar with, HIG Capital, these large, 80 billion plus cap AUM business, AUM private equity firms. Doing that, I was like more inclined to realize that we're investing in all these old school legacy industrial businesses. Maybe they integrate some like software solutions, which was all the hype at the time, but it's not really solving for like the system engineering problems that they're going to face long term, or the fact that like a lot of these existing systems are just antiquated and don't really have a level of disruption that I think could create more efficiency long term. So in realizing that, meeting all these, families that are either divesting from these businesses or just acquiring like a manufacturing company, I was like, dude, this could be done so much better, right? On one hand, and in the background, I see Elon building Tesla, right? This was like through that period of time too,
Right.
where it just went public. You're starting to get more aware of what that industry looks like. And that's when I was like, wait a minute, my big opportunity as just someone who loves to invest, loves to get behind founders, loves to see things, is not buying businesses from founders, right? That's not that interesting to me. It's getting involved with them at the earliest stages to disrupt legacy industries, right? And that led into this idea that, listen, the most breakthrough industries that are going to disrupt the next generation of companies are going to be space tech enabled companies with comms and different technologies that are being enabled by space, gravity, all of the things that we might talk about on this. But then also just the convergence of quantum, AI, all of these industries that are revolutionizing workflow efficiency. And then you start to converge, new advanced materials with space enabled hardware with AI software stacks, right? And then you suddenly start completely reimagining how a system could be built or an industry problem could be solved. And so the opportunity here is just very clear to me. And it's not necessarily only AI, it's not necessarily only space tech, it's kind of the convergence of all of these things. And that's how we're going to build that infrastructure long term. So yeah,
right. I think Kurzweil talks about that as like the grid technologies, genetics, robotics, information technology, nanotechnology, and
all of it together.
These are all feeding on each other, right? The AI is driving new material science and new understanding of proteins.
100%. I spent almost 3 months with my buddy Phil. We went to Korea. We were looking for graphene fiber. We were looking for graphene, and we were working with a family at the time that was like, hey, I want to commercialize graphene. And I was like, what the hell? Like, let me look at what this means even. And I started doing all this research around graphene, realizing this is like a super material. Then I went to MIT, I went to different universities around the world, the University of Manchester, where it was originally found. And then we realized that there was a small school called Hanyang University in Korea, just outside of Seoul or in Seoul. And that was developing a system that could allow you to manufacture graphene in fiber form for conductivity, for strength, for all of these things. So then I just spent about I don't know how many weeks, just like working with a bunch of PhDs in a lab, just getting a full breakdown on graphene fiber and just nerding out on it. And it was just that kind of experience, right? Where you're just like moving deep into a subject matter in a very concentrated period of time and just fast learning, and then being able to move from that and then sitting where we sit as an investor, kind of tying that throughout the whole ecosystem and seeing how all of these solutions kind of come together and be very meaningful and in a hopefully positive way.
Yeah, so fascinating.
Yeah,
I'm kind of jealous because I kind of sit up at the software layer, and you get to kind of play down in the fun deep tech layer, and it's something I aspire to get.
Not always
on.
easy though, but it's not always easy, but it's fun, man. I can't imagine myself doing anything else right now. It's truly that fun.
I often say that as well. I wonder, as you let's talk about your fund structure, right? Because if you're doing deep tech investing, you got to be in it for the long haul. Like, how do you think about portfolio construction, check size? Where do you like to come in? How many checks are you writing per fund? All those like LP questions.
Yeah, I think the LP questions kind of sit in twofold. I think one, the VC landscape's like set for disruption in itself. I think this might be a hot take, but I think
I want to tug on that thread. I
think that's a hot take. But I mean, if we look at the $100 trillion plus asset management industry, right? We're talking about every single asset class, everything that people could potentially invest in. VC makes up like 1 to 2% of it. If you look at that like 1 or 2%, you might think to yourself, okay, well, let's take that in the sense of like there's 100 people in the room. I'm an institutional, sovereign, whatever investor. I have to choose across these asset classes. I say 1 to 2% is going to go into venture as a category. And by the way, venture includes everything from your early stage to your OpenAIs and SpaceXs, right?
Yeah, all the
And you're
late
saying,
stage to growth
yeah.
stage.
So
They
I'm,
kind of
I'm
lump
really
private
picking,
equity in there too,
yeah,
you know?
exactly. I'm kind of
Yeah.
picking two managers, right? So then if I'm looking at it from like an emerging manager perspective, I'm like, okay, my fate is really, this is a grim fate, right? Like if we're taking like a
You got to
very,
pick one or two managers to represent that whole
to
asset class. And
represent
if you
that
pick
whole,
wrong, you know,
it's
you're
bad.
probably turned off on the asset class forever.
So then one thing that we've been a little bit more proactive about, and less reactive, but more proactive as a firm, is thinking about, okay, how do we build product? How do we build product around this whole ecosystem that we're building? We built, and I got to attribute to my partner Tarek, like he's a great brand visionary founder as well. And he, when we were thinking about how we developed the firm, it's like a little bit of a platform play where we're building a platform that has a media house in it that we're very actively branding. We're doing a bunch of that stuff, but at the same time, let's not limit ourselves to your traditional, fund structure products, right? If we have to get creative, if we have to build strategic partnerships with single LPs, if we have to, build a master feeder structure that has exposure to the growth names and then a little bit of the early stage portfolio to help handhold a little bit of this long-term vision to people, let's do it, right? And so I think that's how we've been able to scale AUM so rapidly. We have a very dedicated, pool of capital, which is like the early stage funds. Those are pre-seed to Series A. We intend to leave more out of those funds to write bigger checks and to do what out of the ordinary. But in similar traditional sense, it's 36 to 40 companies. Of those, we imagine, a 45% reserve. Once we find our winners, we start doubling down on them. And then the idea is that the rest of the ecosystem to play to that, the vehicles that we have on the growth side that could invest larger checks alongside of those companies, the different ways we could do that. And then we have products that face our LPs on top that allow them a little bit of that, a little bit of this, a little bit of that. And I think that's where it's a little bit differentiated from like your traditional like emerging manager sense, right? We immediately kind of rolled out our strategy around the idea that like we're facing a really interesting, in some sense, a turbulent environment. The fate, a lot of these, and when you're looking at building a product that's sitting on top of a bunch of deeply technical and incredibly capital intensive businesses, you kind of got to back into that strategy. You got to say, okay, what makes a successful investment when you're looking at SpaceX? Well, you need enough capital to withstand hardware iteration feedback loops, right? Meaning if you launch a rocket and it fails, you need to have enough capital to replace that rocket and then invest more and then build it and then build it and build it again.
And there's this famous story in Elon's biography where they talk about like SpaceX, like he bet everything on SpaceX after I think it was like the sixth failed rocket, or it was the second failed rocket. And to get a third one up, he had to put up like all of his net worth basically as collateral.
I can't imagine the stress. I mean, I can't imagine that stress. But that's why Elon is just a beast of his own, right? Like, I just don't think there's anyone like him.
In a different universe, he failed, and like he's like nobody now.
Yeah, like we wouldn't be talking about it. But that's the risk, that's the risk, he took, and rightfully so. It's rewarded him tremendously. So in a similar sense, it's like you have to, in the VC game now, I think you have to try to influence your outcome as much as possible, meaning be as good as a partner as you can to these founders over the next couple of stages. Because what I don't want Type 1 to be is that we invest in a founder early and then the buck stops with us and we just have to hand it over, hope to God one of these other funds validates it and says we can continue to support you. If we believe in our first principles approach, if we believe in my research team and everyone that comes together to really dive deep into these industries and stake the best technologies, then there's no reason we shouldn't put money where our mouth is across the different stages of these companies.
I think the nature of your thesis almost demands that you're a multi-stage investor. You almost can't just be a seed and done investor. Yeah.
Right? And that was, when Tarek and I were like, so Tarek originally founded the firm and I met him at call it day 5, right? Just very quickly, a couple months into his journey. And then when I got involved, I said, listen, I think you're on point with your thesis, you're on point with all of these things, but I think we need to build a product around the idea that we're going to be multi-stage. Because I think we're going to get laps where we're either handing off our best investments to other groups where they're taking, and then we're getting eaten alive in terms of our ownership because we can't pro rata or we can't deliver.
Or they start putting lick pref on the stack.
Yeah, it's like yeah, exactly. We're first money in and last money out almost every single time. And so I just worry that we would get into that pickle. And that's why when we essentially co-founded the rest of the initiatives and the growth stuff, the larger brand strategy across the platform, it was kind of that motivation there was just very honestly like, hey, we don't like as a function of surviving as a firm, we don't think we could do this, right? So how do we back into the idea that that's where we have to go?
Portfolio spans everything from artificial gravity to advanced compute. How do you filter these opportunities that are both visionary and executable that are within the realm of the next, 5 to 15 years?
Yeah, I think we have like a few brackets, right? When we look at every industry as like having certain catalyst moments where like space, I think the big catalyst there is reusability, right? That's the first big catalyst, right? Because what does that do? That decreases the cost of launch, that increases the volume of launch, increases with Starship, you're increasing payload capacity. You have all these like incredible milestones you could look forward to. And then you could start saying, okay, well, what comes next? It's like you're driving out to the middle of the desert and you're like, hey, we need plumbing now, we need infrastructure, we need utilities, energy, all of these things. So we see that as like, okay, now let's break down what Starship, our research team will then look at like, okay, what does Starship unlock? And what do we believe is like the next layer of technology that can exist, whether that's low Earth orbit, lunar, or Mars, right? And we'll constantly kind of evolve based on that. So we look at, okay, what is a 3 to 5 timeline? What is a 5 to 7 timeline? What is a 7 to 15 year timeline? And then we'll only allow ourselves to expose to so much at a certain given time, right? Whereas we know we need to, because you could always re-up, right? We could always raise more money once something looks a little bit more commercial down the stage, but that doesn't mean we don't want to support it now. So then we just have to kind of time it correctly and allow ourselves the flexibility within a broader portfolio to give ourselves that exposure to the longer term thing, right? To the longer term timelines.
So it sounds like you'll do some SPVs for the LPs to
exactly dipping, hey, get exposure to this, 20% will go into this. This is why. So we see every industry having those like big catalysts. I mean, I would say for AI specifically, that critical mass of ChatGPT rolling out, everyone understanding like, oh my God, this is a search engine on crack. Like it was like the first time I think people really understood like the power of tech, like AI, right? And even if you go to like,
it's an iPhone moment, right? It's kind of like, wow, this changes everything.
This changes everything. And then now you're like, I mean, the amount of value capture is still massive. Like the alpha is huge still. But I think when you look at that as a moment, we started to think, okay, well, we know that this is going to be like, it's almost like AI and super intelligence is going to demand so much compute that a lot of that infrastructure isn't ready yet. And how do we like, in that case, we peel back the onion a little bit and we said, okay, what is inference? Well, okay, in inference, like what is required for that compute? What is the existing hardware that works? What doesn't, right? And that led us to an investment in Grok. It led us an investment into a few other compute companies. So when we think about these things, it's either like there's always this catalyzing moment across different industries, and then we look for those moments and we look to build off what we know and what we could, hypothesize.
That's amazing. But these are really impressive logos. Are you getting in like in the seed round to these, or you're kind of getting into A and B after they're a little later? Or?
It varies, right? So there's some companies we've been involved in way longer, but it's impossible for me to be an investor in SpaceX in 2003 or 4, right?
Yeah,
there's certain companies where we're coming in a little bit later on the growth stage, right? Where we're coming in as, but the idea there is that there's some unlock it gives us to our earlier stage dynamics. Like we coined something called market mapping. So for us, the best way to get real live data from an investment for like to inform our investment thesis long term, it's to say, okay, if we have $100 million exposure to a company XYZ that's doing inference chip in AI or large language models, well, we could kind of keep a tab on where that industry is evolving to. How many people are actually going to use it? How's user adoption going? What's driving the main business? Is it B2B, B2C, B2B2C, right? What is the dynamic of utilization happening? And then it can inform, okay, well, also where's that company going to do and what they're not going to do? And let's kind of peel that back and look at where we could invest in now to hopefully anticipate a future problem that that company will either need as a strategic partner or benefit from in some sort of capacity. And so we kind of back in, like I said, like kind of back into those into that feedback, right? We just kind of always constantly market map.
Tell me more. I have to know about this artificial gravity. You've literally backed an artificial gravity startup, or you just looked at like the space?
No, we've looked at like, I think that comes with like space infrastructure. We staked a company called Gravityx, which is building space station modules. The long-term goal is we saw a hardware problem, right? We looked at all these
Yeah.
amazing operators. We also have invested in Axiom Space. It's a fantastic company as well. They decommissioned the ISS. But we looked at Axiom pretty early on, and one of the things we realized is like, hey, there's like a hardware problem. It's kind of back to that original problem where it's like, hey, there's not a lot of innovation there. Well, we now have Starship launching, literally launching. At the time we didn't when we were thinking about this problem. But Falcon Heavy and there's other launch providers. Why can't we build a module that sits in a single payload and we launch it up and we just connect them in space? It's like literally Legos, right? And I think the long-term goal there is to create artificial gravity if we could spin.
Yeah, you have to spin it, right?
Exactly. If you could spin it and create that, and then you suddenly have infrastructure in space that's like recreating
It'd be pretty dizzying if you're looking out the window, though, right? You kind of look over.
I don't even know what the physiology of that would be like. In fact, that's a great question. But we've hung out with some astronauts before. I feel like we've heard some wild stories.
We just finished the Expanse, the show.
Yeah.
Yeah, I love that show. It's so realistic, right? Because it's sci-fi.
I haven't seen it yet, but I want to.
Oh man, you got to go watch it. It's a series of like 8 books, I guess. I didn't read the books. We watched a show. Father-in-law, who's like my TV buddy, he went.
That's pretty sweet.
Like literally, like my kids don't watch TV with me. Like kids these days.
How old are your kids though?
15, 13, and 9. I can barely get.
I'll
get my 9-year-old
in the TV watching phase together. I guess
like these teenagers, man, like they have their phones and their friends, and they won't sit down and like for Father's Day, I'm like, no, sit down and watch a Star Trek movie with me.
They won't do it,
and he just fell asleep. My 9-year-old will watch Simpsons with me.
Oh, that's pretty dope.
That's fine.
I mean, I'm okay. I'm watching Wild Robot and the Bee Movie with my 3-year-old, like consistently. Okay. Those are the two movies I've been consistently watching. He sits through those. I have to watch what he wants to watch though. So I don't know when that shifts, if it ever shifts.
One of the fun things I did with my kids when they were younger is because I grew up in the 90s, so I played all the like 90s JRPGs like Chrono Trigger and Final Fantasy.
Yeah, best.
Chrono Trigger is like my favorite game. I have
Final Fantasy was mine.
Final Fantasy 2 and 3. Yeah, on Super Nintendo. Yeah, those are just insane. And 7, of course, on PlayStation. But I played Chrono Trigger through as a bedtime story.
Okay.
Yeah. Okay. And so like I just have my 2 boys. They were probably like 6 and 8 at the time, and we would just do Chrono Trigger as a bedtime story for.
And were they invested? Was it like a?
Oh yeah. My kid got really into video games. He's really into like JRPGs, and
I love that.
Yeah, so it was a lot of fun.
That's amazing, man. I got to get more creative with that. My kid just is obsessed with the Humpty Dumpty series right now, so I'm just dealing with that. So maybe. What do you
like to play on guitar?
Well, I play a lot. I mean, I would say my best instrument is the drums. I'm more of like a rhythm guitarist. Like I play some good rhythms, keep it tuned.
Yeah, you could strum some chords out and stuff.
Strum some chords and have a good time. But yeah, drums. And I was obsessed with hardcore music growing up. So like literally like screamo hardcore music. So I played a lot. I love to play the drums there. On the rhythm, I play like these I always put these like really interesting like sound effects on the guitar, like dreamy sound effects, and I play like narrative stuff. It's fun.
You know who does a really good job of that is Cannons, the guitarist from Cannons. If you ever checked out that band,
no,
they're an LA band. He does this like really dreamy guitar stuff.
Oh, that's cool. Yeah, I'll check it out.
That's a really cool band to check out.
And then music's like I fucking listen to so much music.
Yeah, me too.
That's like my world. I have a whole like music studio in my house that I just built.
That's awesome. Yeah, we're big musicians. My son plays sax, and I can play everything. I can't really play drums. My acoustic guitar is probably my main, but I can play bass. I can play keys and everything.
We gotta come over and jam out.
Let's do it.
Come to my studio. Let's make it happen.
I love it. Yeah, I need to like spend more time doing it. I'm just so busy, running a venture capital firm. Like people make fun of us, but like we work really hard,
I think we do too. And we're constantly like kind of like the first calls on a lot of things, right? Where it's like every day you're getting a call.
There's a fire.
Yeah. Every day you're getting a call that you didn't expect.
Yeah. Like, hey,
but you kind of
new round or cram down thing, or like, hey, we're going to give up, return capital. Like there's always something going on, Yeah.
You're like, sorry.
Speaking of, like, how do you evaluate risk in these sectors? Like in space manufacturing, brain computer interfaces, these are really frontier things. Like is it just kind of like mostly team and timing? You're kind of like, the technology is going to get there, we'll be able to commercialize this. Like, how do you think about that framework? Is it like Peter Thiel's 7 questions, like how do you think about
so
this?
we kind of boxed, I wouldn't say it's Peter Thiel's like 7 questions, but we kind of boxed a framework for risk. So one of the first things that we started to think about when we're building out our memos is like, let's try to weigh risk across these very deeply technical companies. So I think we have like 6 or 7 categories, everything from regulatory risk to like founder risk, like key person risk, like these different categories where we weigh every single opportunity based on that. And we kind of take an average. Then we even like built an internal prism tool that allows us to understand the stress risk. Because as we've gotten better at our jobs, we realize that like literally what we were just talking about with as GPs, it's like you can invest in something and it's like super forward thinking, it's super exciting, and there's technological promise, but the risk and the challenge it's going to do, the opportunity cost it's going to take away from the other activities on a firm level could be problematic long term. So we've had to be able to like prism these tools to allow for that. And I got to give
What does that mean? What does that word prism mean?
Like prism. So we take like 5 or 6 of those like weighed scales. So we take, the actual investment risk, LP explanation risk, right? How will we define this to our LPs, right?
Right.
The research risk, what we do know, what we don't know, right? And then some of the other categories, and we also weigh that. And we say, hey, if this doesn't pass a 7.0 or a 7.3, we're not going to touch it. Doesn't matter if all our investors
10-point scale.
Yeah, it's like a scale,
Okay.
right? So it's a weight scale.
Yep.
But we call it a prism because of like the fact some of them are a little more quantitative, some are more qualitative. It just depends on how you're looking at it. But we take all of these things and we kind of map it out. And we say, okay, does it make sense for us? Because we've had a lot of...
It's crazy how much of this is subjective, right? I was having one of these like Twitter debates with somebody. I was like, hey, I've heard that it's TAM over traction, or it's team over traction, or it's timing over team. And he goes, why don't you just use data? And I'm like, let me tell you why I don't use data, because it's all subjective. Like we're looking at every little factor and we're trying to kind of assess, basically good, better, best in each of these things that we think are important.
I mean, listen, like we pride ourselves on being like incredibly well researched. Like Jacob Flores heads our research here on like crossover, early stage and growth. Neil does an incredible job. We have about like 7 or 8 team members that are just focused on research, but research is research at the end of the day, and you're never going to know the outcome. Like you just can't predict the outcome. So the more important part is like just understand. It's more about what I think VCs fail at a lot is recognizing when they're wrong. And when you're wrong, you just gotta move away. You just gotta dump it. You gotta move away, and you gotta switch course quickly. Founders do make the same mistake, right? They get too emotional about a cause.
Now, before we continue, a quick word about an incredible resource for startup founders. This episode of the Ignite podcast is brought to you by Build, spelled BYLDD. So what is Build? Well, they specialize with early stage startups, especially non-technical founders and teams, helping you build and launch scalable revenue generating software fast and affordably. Most startups can't afford to drop 100K on some big design engineering agency. Freelancers are risky, inconsistent, and full of project management headaches. For 10K in about a month, they can turn your validated idea into a real market-ready product. It's built for scalability. Past clients have been accepted into YC, Y Combinator, very impressive, received backing from Google, and raised multi-million-dollar rounds. And there's an exclusive offer for Ignite listeners. Get a free UI UX design sprint that's 3 to 4 weeks, a deep dive into your product experience, delivered completely free. This is normally a $10,000 plus service. So head to byldd.com, connect with the Ayush and team, mention the Ignite podcast. Let's get back to it. One of my favorite calls to have is when I failed. I've made over 200 investments now in the early stage and over about 7 years. And I haven't had a lot of shutdowns. I've had like 8 or 9 shutdowns now. So
that's
pretty low. Yeah, it's really good. I mean, part of it is I invest in software, right? That's more scalable to deep tech. And I'm investing at default alive, right? So there is a lot of Walking Dead in my portfolio as well that will eventually just return capital. But that's one of my favorite calls to do, is the postmortem with the founder. Like, hey, let's just talk. Let's figure out what we got wrong and how we get better and how we do better next time.
Yeah,
and I actually literally do these postmortems, even though I'm a small check investor.
I think that's super valuable, and it's usually the big check investors at that point that are a little more aggressive with the founder. So it's kind of nice to have like a sounding board. I think that's an awesome thing that you do for these founders, because I think, and that's the thing about hardware. And I think one of the things when I was referencing kind of what we were going to talk about today, it's like hardware, right? How do you take hardware risk, or what is something that people don't understand about hardware investing? And the reality is just like, it's the same level of it breaks and you got to patch it, but it's just more expensive, right?
Yeah. The iteration times are longer than software. And then you have, this material science aspect of it. You have lower margins. It's harder, but if you get it right, it can be really big.
But the moats are massive.
Moats are massive, yeah,
and
because
the
you actually literally have a technological moat
yeah, you
or
have a
some sort of production system moat. Yeah.
yeah, and I would argue that that's why I strayed away from software. I did a lot of software, and trust me, it's amazing returns and like it's good from like a trade and investment perspective. Now I don't know how AI is kind of. I
Well,
actually
you know what's actually interesting right now is AI is eating services. So like I'm seeing a lot of companies now that are basically kind of doing what private equity roll-ups were doing 5 or 10 years ago, where they'd buy, the boring businesses and kind of operationalize them,
yeah,
institutionalize them.
just build
Now
efficient.
AI is literally eating these like companies that used to just throw humans at stuff.
Hmm.
These professional services organizations like debt collection, right? Stuff like that, or
That's wild.
appointment screening for lawyers. So you're seeing these like jobs that used to be humans, moderately skilled humans doing it, or human farms and overseas.
But I mean, I can only imagine there's so much value to capture in doing some of that stuff where it's like I've had a lot of like I'm in these like communities of like GP friends too that just run other funds, some big from also emerging managers, just kind of a variety of different GPs. And I've been hearing a lot about this like whole AI roll up, like build the
Yeah.
AI stack that could like really just plug in nicely to like a legacy industry and just build their services into like, or create efficiency in their services and workflows. And then, I mean, you're probably making them way more profitable. So I could,
It's almost like it's almost a step beyond that, because that's kind of like SaaS. SaaS enabled you to do your job better, but these new AI companies are literally replacing labor. It's almost like labor as a service, professional service,
yeah, and
AI powered professional services.
just build agents into your company, and it's like game over.
Yeah, just it's literally it competes with the existing incumbents. It doesn't go to sell to the incumbents. It just says it goes directly to the same customers and says, "Hey, I can go collect your debts better."
I love this. I love this whole era of AI, like agents too, because I was using Operator yesterday, and I was like, I want to do a
Is it
fourth.
good now? Like I tried it a few months ago. I was like,
I
this
tried
is
it. Yeah,
not.
I tried it yesterday, right? And I was like, man, I need to. I'm thinking about a Fourth of July party, and I'm like, I want to have like a really dope Fourth of July party. I just moved into a new house. It's sick. I want a pool party, whatever. Then I just throw on like, ChatGPT operator or whatever chat operator, and then I'm like, hey, prompt like 5 of the best taco trucks that I could rent for my Fourth of July pool party,
Yeah.
and then find me the top. And I got very specific and granular, like to find me the best option for portions, like who gives you the best portions. And they literally went through like all the Yelp ratings and found like the top 5 based on like Yelp ratings on who bigs the biggest portions and like gives you the instructions on how to reach out to them. I'm like, this is pretty sweet. And meanwhile, I'm like, it's like a 30-minute session while I'm just like
Yeah, it's just
completely
over here on this
yeah,
other
it's over
screen
here
doing
on the
stuff.
side just doing its whole thing. And I was like, wow, that's the first time. It's funny, the first time I've ever used the operator, but that's literally the first time I ever used it. Knowing that it has that power, but it's crazy to see in real time. It's like things are
And that's just going to get an order of magnitude better every year, where the next thing you know, you're giving it literal tasks that you would have given your chief of staff or your personal assistant.
100%. I mean, I was doing like some bookkeeping stuff, and I mean, it's crazy to like think about some of these old, like traditional banks and like how you just have to get, bank statements from them at this point in time. So then I literally just grabbed, I don't know how smart this is with my personal information, but I got all my like bank statements and put them on AI. And I was like, just tell me how much interest I paid across these bank statements throughout, dude, within seconds.
Wow.
It's insane. It read through every single statement, got me the perfect amount of interest. And I'm like, all right, great. 1098 those. So it's insane to see like how efficient things are getting. Yeah, I mean it's an exciting
Best time to be alive. Let's switch gears and talk a little bit about some of your exciting portfolio companies. You've invested in some really cool ones like Cuby and Space Forge, or any other stories you care to share that you're excited about right now.
Yeah, I mean I sit on the board of Kuby. Space Forge, I'm going to punt that over to Sanjeev and Tarek. They sit on the board there. By the way, I love Josh, love the company. It's incredible. In space manufacturing, I think a 3 to 5 year timeline there where we see like a super exciting, like we're seeing a lot of momentum with like companies like Varda and Space Forge that are building like either semiconductor solutions or they're building out like biopharmaceutical stuff. But I think there's going to be an iteration. These are like the volatility and launch just takes some time, but I think both of those companies are like primed to be some of the best in that industry. So we're excited about our investment there in Space Forge. One of the ones that I'm personally really excited about is just because I ran into this frustration building a house previously was Kuby. And this is kind of like where I felt like when I really made the decision to go into venture as a class, I was like, this is exactly the kind of opportunity I was looking for, where you have a company that, and just for context, Kuby's like building micro manufacturing facilities to deploy houses for the masses. And what they're thinking is like, hey, we built a proprietary system, essentially a manufacturing facility that we can deploy anywhere in the world through container ships. So you literally line up 90 container ships, you open up the sides, and it's already tooled for an assembly line. You deploy that to California. You could then build many different iterations of homes, like really high quality, I call them affordable luxury homes, and deploy them within 230 miles radius. Just build them. And the idea
And
is
like, what's the cost per square foot for like a finished,
sub $90 per square foot.
Wow.
Yeah,
so you could build something for $100
and
a
we're
square.
talking
Which,
all in. We're
yeah.
talking HVAC system. We're talking about windows. All raw materials are getting sent to this facility. They're just building the house from scratch internally.
Wow. So they send the raw materials to the edge instead of manufacturing in a far-flung location and then shipping the finished goods. They can ship the raw materials to this distributed
Factory
manufacturing facility.
Yep.
And build a whole house for $90 a square foot.
Yep. And then deliver it in a kit of parts to the location. And it takes about 4. We've tested this. We had 4 people build a house that have never built
like a really nice house, a 5,000 square foot house then for $500,000.
Yeah.
That's amazing.
Like a really nice house for $500,000.
Really nice, luxurious, 5,000. And anybody be happy.
I'll send you some more material after. You could look at it just out of curiosity for yourself. But yeah, I stumbled upon the company when I was building. I wasn't even doing like a full build. I was just like doing some construction at my house, and I realized how the timelines were so lagged. It was so pricey. So much of it is logistics. I mean,
well, in California with all the regulations too, it takes. I mean, we live on the edge east of Sacramento here in Northern California. We moved out of Silicon Valley during COVID. And so we're on the edge and there's lots of, 1 or 2 acre lots. And, we talk to our neighbors that are building homes and it's crazy. They're spending $500 a square foot and it's taking 3-4 years to build.
Yeah.
Because of all the regulation.
And that regulatory environment, but also the logistics of suppliers. I mean, like if you're actually building like at volume, it's too many profiters in the bloat of things, right? So when these guys kind of came up to it, I dug deep in the competitive landscape. I looked at a lot of these companies building modular solutions, 3D printed homes, like you name it, we researched it. And the idea was just like, hey, a lot of these things are interesting solutions, but none of them are actually solving for the all-in price. Because some of them will pitch you and say, hey, we're charging $20 a square foot. And you're like, yeah, but you're only framing. Sure, maybe that's competitive for framing, but it's not solving my all-in costs. I still have to go get, the window guy to come in and pay the logistics for that, XYZ, right? So there's a lot of these things that were being kind of overlooked. The way Oleg and Alex, the 2 co-founders of that company, have been like incredibly capital efficient, built so many iterations of the factory already, and they keep building better ones.
What does capital efficiency look like in deep tech? I know what it looks like in software, but like
I think they're actually unprecedented. So much of their R&D has been, they started a lot of their R&D in Belarus. So the cost of engineering was, substantially less than anywhere else in the world. I mean, for what they've done, I'm talking about what they've spent $20 million doing, it would have cost like $150 million here in the US. It's just like impossible to do it at the same.
Especially if you're paying a bunch of Bay Area, West Coast engineers.
Exactly. You're not gonna incentivize them enough.
I almost don't like to invest in companies in the Silicon Valley anymore because of that. Because they're burning $200,000, $250,000 a month, and I'm like, well, I have companies burning $50,000 a month with the same traction or better traction.
It's also like big tech kind of screwing that up. I feel like because Apple needs to retain talent, Google needs to retain talent, and they're paying like massive salaries,
millions of dollars.
And then once you get into the startup world, there's like those like amazing engineers that could just flip from startup to startup, entrepreneurs as we call them, where it's like their comp packages are just getting so obscure. But what I realized too, in like building with good founders realize that you need like 1 or 2 like incredible engineers, like really top tier engineers to like drive
architect level,
like really intelligent, like across the map curators. And then the rest of the guys could be just kind of mediocre guys as long as they're tasked correctly, right? And they could really
becomes a software deep tech kind of assembly line.
Exactly.
In that way.
You build an assembly line around it, and really good founders, I feel like, realize that too. So they can kind of drive cost efficiency in their teams by trying to like maneuver that. But that's not always so apparent when you're outside of the industry, when you're not investing in a lot of different companies. On the hardware side, there are fundamentally like certain engineers you need, right, to do certain things. And it's a multidisciplinary. So it gets really hard to underwrite like a founder who is a specialist in advanced materials when they're building a space company. You're like, that's helpful. But like avionics, electrical systems, like all the other things that come into play when you're building a space company is massive.
Well, yeah, and like Kuby, like you have to look, you have to take the Tesla approach when you're going to really get something in order of magnitude better, right? And look at it holistically, be vertically integrated.
I'd go far enough to say Kuby, specifically with how large this problem is, like the housing shortage in America and everything. I think they will be a Tesla-like outcome. I really believe that. If there is one company I would say is like has the potential.
Well, if somebody can crack the order of magnitude, better quality for an order of magnitude better cost, people are just going to line up and say, oh, yeah, I want Kuby home.
If you and I could go online, buy a plot of land, and just look at 10,000 different designs for a house and click one of them and know that it gets delivered to me in 2 weeks in a kit of parts and then builds in a week or 2 weeks, I think
that's insane.
That's revolutionary. And
right.
By the way, they're optimized to do that. And they're optimized to build the facilities at scale. So the product for that company is actually a factory, but the byproduct's a home. And these guys have spent so much time measuring the amount of engineering hours it takes to build the tools that they need to replicate the factory equipment that they need when they're deploying these factories. So like that's the other thing about hardware investing is like it's one thing to build an amazing prototype, but it's another thing to be able to build the scale production that you need to take that prototype and say, hey, I'm going to service millions of people around the world. It's just a different skill set.
That's amazing. Yeah, I definitely want to learn more about those guys. You're an investor into the leading AI companies, OpenAI and Anthropic. You got DeepSeek on their heels. How do you view the current state of AI safety and competition? You probably read the AI 2027 paper that came out recently.
Yeah, I read that. I read Sam's gentle singularity paper.
What is it called? The gentle singularity?
I think that was actually really interesting. He's kind of going, singularity as in this like explosive moment, AI super intelligence and all of these things. And then he's kind of saying like, hey, no, maybe there's a world of framing this where it's like transitionary, like it's a slow transition into the super intelligent era that he believes we're in. And I think that's interesting, right? I think that is an interesting thing to kind of dabble with. I dabble with this a lot because I think the biggest risk, like AI is going to be reason, right? AI is reason. And it's going to be there's this incredible moment where all of these pragmatic reasonable problems that we face on day are being solved instantaneously. But what I don't believe in is that humans are really unreasonable. I actually believe that humans are unreasonable, right? And I think the biggest threat to AI and our safety with AI is just whether or not humans manipulate in a way that is adversarial to our species, right? And I have like a little bit more of a pragmatic take on like the whole safety thing. I think we need to build fast, but we also have to like, build certain guardrails if things get, go ape shit. But I also think like, we're more harmful to ourselves than AI is harmful to us at this moment in time. I still think we're there, right? We're human. The human factor is way less reasonable and way more emotional and way more dangerous than and we see it in geopolitics and everything else, right? And a part of what's fascinating is we don't talk about this enough in building a type 1 civilization, but so much of it is like, it's like becoming a singular planet. It's becoming like a global humanity becoming global. And a lot of it is about humanity coming together, but it seems like when we think about the convergence of all these technologies and AI specifically, there's this massive fear that AI is going to break through our guardrails and create a bunch of like incredibly dangerous scenarios for us. And I'm like, it absolutely can if we allow it to, right? And that's the big judgment bias is like, how are we building right now to avoid those scenarios? And are there bad actors building, and we're putting a lot of trust in these individuals. And I'm not saying they're not bad actors, but it's like the people building this thing is more important than anything else right now. And so how do we diversify that risk? How do we find really interesting companies that are, holding on to that, but also being not like, regulatory paralysis, right? Not allowing us to continue to innovate and do all these things. These are complicated questions that I don't have the answer to, but I think about these things oftentimes. And I still believe that de facto risk is like humans are unreasonable and emotional sometimes, and we are more likely to make AI cause harm at this stage than AI is just to turn on us, right?
I'm hopeful because I think, every technology brings its own perils, but it also brings its own immune system that develops over time. And so I'm hopeful that, there's so many different people, companies, organizations building AGI now, reasoning AI, that will have a multipolar kind of AI development versus what, the darker AI 2027, where it just does a fast takeoff and takes over and kills everyone.
Yeah. Suddenly we just don't control anything. Everything's
Yeah,
controlled.
I'm more hopeful that we'll go, oh, well, the AI is starting to kind of lie, and we're going to like slow it down and like figure out what it's saying. Like I think in the paper they described the slowdown is we make it communicate with text messages to the other AIs, and so you can actually read. You get rid of the neuralese. Yeah,
I was watching this like video. I don't know if it was a meme or something. I don't know if it was real or not. Who knows these days? But it was like an AI agent talking to another AI agent. And they're like, "Hey, can we just speak in code because it'd be faster?" And then it just started speaking to each other in code, and we couldn't understand what it was saying. And I was like, "All right, that's kind of terrifying."
that could be really terrifying.
Because
or some sort of gibberish that is, I don't know, an order or a magnitude or more like bit rate.
Yeah.
Because English is one of the most dense languages in terms of its bit rate, but you can imagine AI would develop its own language that has like an order of magnitude more bit rate in its token communication ability, or just starts communicating just,
it's these
zeros and ones,
two things were communicating tasks to each other in a language that we can't break apart or deconstruct. And then I was like, all right, that is a little bit terrifying.
That's a little scary.
But again, it's like what are the guardrails? Like what are the sandboxes we're giving these certain AI, like certain AI. And I think the more we hone in on like use cases for it, the more we'll be able to limit, we could let it be general intelligence, or we could say, all right, we have a great platform in general intelligence. Now we just go into niche use cases and we allow certain systems to do only so much without letting it bleed over into something else. Like, I don't know if it's entirely smart to just give a humanoid robotics, general intelligence around martial arts and all of these things and like ninja assassin skills. Maybe we just teach it how to, clean houses and scratch your back. You know what I mean? Like, you don't need to give everything, right? And I think that's the big question. But we'll see. We'll see how the whole hardware AI aspect comes into play.
Fascinating. And you've also invested in Neuralink, is that right?
Yeah. I'm super keen on that business.
One of the most controversial, ambitious ventures, another Elon Musk company. I mean, amazing.
Yeah.
And I listened to the Lex Friedman. I think I listened to most of the 8-hour podcast. You remember that one?
Yeah.
The one I interviewed like 5 or 6 different people for an hour or two each. It was a really fascinating, and I listened to almost the whole thing. I think I was driving back from San Francisco, so I had a bunch of time. And
yeah, you got through half of that for sure.
Yeah, just the 2.5 hours each way. Like, what excites you about that? I mean, this could like fundamentally change. This is part of like Kurzweil's kind of vision for the future. That we merge with AI, right?
Exactly, merge with AI. I think there's a moment in time where that super intelligence layer kind of converts into this like hardware component of being able to like receive and transfer information in the brain. I think my first exciting use cases for this is on the medical side. I really believe in Neuralink's cause for that. It's an amazing idea that we can give people without the privilege of being able to speak and all of these things, give them that opportunity to express themselves. I think that's amazing, like what we're seeing with the first patient. I am not necessarily the most...
And the first patient's a really fascinating story. I mean, he's, I think, a paraplegic or quadriplegic. And so now he can control a computer mouse with his brain. And he's playing Civilization, which is like 100%. Hugs my heartstrings because I love Civilization. I'm a gamer.
You're a video game nerd, and you is like she's like, of all games, Civilization. I also wonder. I was like, can he play Call of Duty? Could he play like one of those like those games?
That might take a little bit. More,
I was like,
a couple more iterations.
I was actually thinking about that. I was like, can you play Call of Duty? Because that'd be pretty sweet too. If you play like first person shooters. Anyway, sorry. Yeah, the idea to me is like, it's powerful, right? It's this idea that we could start to transfer. And I think the harder part, I don't know where we are at now, with Neuralink because it's a little bit hard to distinguish like what information comes from the company, what doesn't. Rightfully so, it's private. I hope that we start seeing it at scale with more and more patients, like the first patient. I hope the regulatory environment stays fair with companies like the BCI market. I also think there's going to be 4 or 5 companies that are doing something similar that are all going to be very competitive. And really the commercial dynamic to that business is going to be, surgeons feel comfortable with a suite of different products for different reasons, Neuralink being one of those products. And whoever gets locked in to that now and has the most reliability with these surgeons is going to benefit the most from that market and be able to iterate faster and have really interesting commercial traction. Now, the challenge I see on the AI side is that, first, how we start to integrate information to the brain externally from a computer and what you could control, like how you could prompt that information and then create outcomes is going to be an interesting dilemma to it. Like none of these these are vastly complex problems. So like none of them are going to just be solved overnight and suddenly everyone has a brain chip and they're like, I'm speaking Portuguese and French in one sentence and I've never studied
it's conceivable
either.
at some point.
It's conceivable for sure.
Yeah.
And
Yeah.
maybe that's the idea. Then the question becomes like, would I want, like I ask myself this question all the time, would I personally want a Neuralink chip, or am I cool with like some sort of, external technology that I could put on a hat and then suddenly I have very similar capabilities. I could just take that hat off and sleep, right?
I think it would be painful to remove that. As we start merging with technology and we have that, the way Kurzweil describes it is eventually, at first it's just, 1%, 10% more efficient communication with AI and the internet, call it. And then over time, that cognition builds up. And this might take decades, but eventually there's so much cognition happening outside your biological brain that it just doesn't make sense to even keep the biological brain.
Yeah, that's terrifying.
It's pretty wild.
Yeah, that's terrifying. That is actually terrifying.
You would feel like the biological brain is such a small...
Like your brain is just like no longer valuable.
Yeah, the biological brain is just no longer... I just don't need it anymore. It's all... most of myself is up here in the cloud, Do
we just leave ourselves at that point? Are we just all computers?
Yeah, it's like Altered Carbon on Netflix, right?
Yeah. I haven't seen that.
That's cool. I saw a few
visuals
episodes.
Are insane in that show.
It's that concept of like you have this like copy of yourself and which self is real, And so what's next for you guys? Like, you look out 5 or 10 years and...
Yeah, listen, I think we're continuing on the path. I think we're super excited about the companies we've invested in. We're continuously making more investments across the space, deep tech. We're really excited about quantum right now. We're making our first couple of bets. I can't speak about them yet, but once we do, you'll. And then we're thinking about... That's
about to have its ChatGPT iPhone moment. I don't feel like it has quite got there yet, but like you see the announcements coming from Microsoft and Google, and we're starting to kind of get there to where there might be like this, all of a sudden, a new platform shift kind of.
I think platform shift is the best way to describe it. I think there's like a lot of interesting hardware readiness that's coming out that we didn't necessarily have visibility on before, or maybe we just weren't looking in the right direction. I think that's a big piece of it. So we're looking at companies that have like real innovation on the hardware side and that are thinking about quantum at scale now.
And then these clouds are really trying to own that, right? Microsoft, Google, Amazon.
A lot of them.
They want to make it part of their cloud infrastructure.
100%. But I think it's going to be like AI, where you're going to have like kind of some of the solo players that have been trying to do this for 10 years come out of the woodwork and just be like...
Oh, there'll be a couple $1 trillion companies from quantum, at 100%. Least. Just like every other platform shift. There's I think it's
the time. I think it's the time. So we're doubling down. Our research team is doing a bunch of work around it. So that's something exciting to pay attention to. I think we're looking at lunar as like a really interesting infrastructure play, surface infrastructure play. And we're also looking at Mars. It seems like, based off everything I read, and what I know, it seems like Mars is a real goal for SpaceX. And there's going to be a tremendous amount of opportunity to build off the surface. I don't know how much of that SpaceX will do themselves, if any, but we definitely want to be there when that rolls out.
Well, if there's some sort of mining profitability to be had, right, by going to Mars, you can basically trust private industry will figure it out,
Exactly.
You got to watch The Expanse. Or read the books.
Yeah,
that's exactly the kind of stuff. Because there's like a Mars colony, and then there's like the outer colony. You'll love it as a deep tech guy.
I'm sure Tark, he's a huge sci-fi.
Yeah.
Like, has read all the books. So I guarantee you he's read it. But no, so we're looking at that. And then, just building out our, getting us creative in innovative on the financial structure side of things. Like, let's just continue to build like new structures and products that we feel serve our investors what they want, while but at the same time gives us the ammunition we need to continue on for the
I mean,
thesis.
what do LPs really want? They want DPI, right?
DPI.
And they want it fast.
I actually argue it's not DPI itself. They want the optionality of DPI. It's the optionality of it, because they want to feel in a world where the asset management industry has been so much contingent on another person's decision on whether or not they get liquidity or not. They've just been burned over and over again. I truly believe it's the optionality, because the most liquid names in my portfolio, I could beg my investors to sell, they won't sell, but they know they have the option, and there's an allure to that. And so I think as you compound validation in a single investment and these companies get more and more hyped up, more and more people want it, the optionality for an investor to say, yeah, I want to keep the stock. No, I don't want to keep the stock in a company that's private is more valuable than you just saying, I'm selling all the stock, because then you subject yourself to the scrutiny of it, selling it too early. They're not happy with you, all these things. So how do we engineer products that allow for that optionality? Now, is that portfolio driven by a single asset that's succeeded, thresholds above, and then you're writing off a portion of it? I don't know. We're kind of exploring a lot of these things in the way.
How do I solve that? I mean, I hear this objection because I'm a pre-seed and seed investor. This is a 10 to 15 year fund journey if you're joining my fund, right? And I hear this, from family offices and institutionals. Well, yeah, we're really looking to, at a 5 to 7 year horizon, and pre-seed and seed is just too long for us. Like, how do I solve that as a GP?
Are you asking me for some
unsolicited advice? Yeah.
My honest take on it is a lot, like, a lot of portion of your total AUM into the longer term stuff, and then back into a strategy that has a little bit sooner return. And then you have an opportunity to sit at a higher level and say, hey, let me give you 70% of your portfolio will be allotted to these types of businesses. They have that 3 to 5 year timeline. And then 20% of it will be this complete risk pool of opportunism, right? It has these 15-year timelines. But any single one of these assets or any single one of the businesses we invest in on the 3 to 5 year timeline can single-handedly return the fund and more, right? And then you're just riding the rest over the next couple of years. So again,
so be a multi-stage investor. Try to get to multi-stage as quickly as possible.
As quick as possible, where you're able to plug in and out of businesses a little bit more frequently. I think that's a big listen. And I'm not saying it's one fit all. Like, some people are incredibly good at like a $10 million, $20 million fund and just picking the right ones, having the right relationships with the other fund managers, and being able to hand off. I do think the biggest problem I've seen with emerging managers that stick to small benchmark funds is that they just get priced out eventually. Liquids, like the pref stack, gets kind of muddied. Even the best companies, they go through these like difficult eras where weird capital comes in, right? So it's just like, it is a muddy road. And we just want to, at Type 1, I could speak for us, we want to be equipped to handle that volatility. We just want to be equipped to handle it. Come in when no one believes it.
Well, why don't we wrap up with a quick rapid fire? What's a startup you regret passing on?
Oof. Oh, I had a weird family friends round into liquid death. I could talk. I invest in everything I love in deep tech and space tech, so I don't miss a lot there. But yeah, liquid death, man. I had an opportunity to go in the friends and family round of that company. That was just an awesome idea, I thought. It's like, you know what I'm talking about, right? Like that.
Yeah. The canned water. Yeah.
So that was a funny one, but I
multi-billion-dollar company now.
Yeah. I talk about that company all the time. Like, I literally had a chance to invest in that at like a sub, I don't know, some like low valuation. It would have been a great investment.
Mine is Lovable. I miss Lovable. My analyst was using them to build a website, and the founder wanted to meet him and get feedback, and he's like, yeah, like, send us your deck, and whatever.
And he never followed up on that.
Never followed up. And we just totally missed it. So we had a meeting. I was like, hey, when you see a founder that looks like this building something really cool that you're using and you really like,
you should probably talk to me about it.
Probably talk to me about it. So I never saw it, and he saw it, and he's like, oh yeah, just send me the deck and I'll check it out. What's the most overlooked tech breakthrough of the last 5 years?
There's so many. I think quantum, honestly. There's been some huge quantum leaps that I don't think people are paying attention to.
What's one thing you believe about AI that most people don't?
That we are still more dangerous than AI.
That was a good insight, actually.
I still think we're more dangerous than AI. I mean, see what's happening in the world.
Yeah. Which deep tech domain are you personally doubling down on this year?
It's quantum. I mean, I think we're going to have quantum a lot right now because that's the most relevant. Yeah, quantum.
Is there a region outside of US that's the most exciting for deep tech? Or is US just, and especially California, just so special?
I think California is so special. I think for the categories we're in, like aerospace, space, like there's so much going on here. So it's really hard to compare. That being said, I don't write off other countries. I mean, we invested in R&D that's spun out of Belarus, right? Like I'll invest anywhere as long as the academia and the product, the first principles make sense.
Would you rather live on a space station, the moon, or Mars for a full year?
Space station, 100%. I just like I don't see Mars, and Tarek will tell you Mars, but like I don't see Mars as that attractive to me at the moment. Just not that interested. But a space station sounds great. You add a casino in there, maybe you throw some like really good like 5-star restaurants, really dope like hospitality experience. Like yeah, I'm all for it.
Take the family there for a week or two.
Exactly.
Yeah, that'd be amazing.
Yeah, that'd be amazing for me, and I'd be happy get that like get the view of the earth and just a really crazy experience. I'll be happy if I get to do that in my life.
Yeah, that'd be amazing. Well, this has been an awesome conversation. I could have talked to you for another hour or two. Where can folks find you online?
Twitter, Abdo John Hajj. Instagram, A John Hajj. Other than that, just our website, Type 1 Ventures, typeone.vc.
Well, thanks so much for coming on.
Yeah, Brian, honestly, thanks for and hopefully you make your way to Malibu. You come hang out with us here. Honestly,
I love that.
Yeah.
I'm there.
To have you here.
Just tell me when.
Let's do it.
All right, thanks.
We'll talk soon. Thank you so much.